Brad Williams, Frugal Finance. We read about it, we look at it, we talk to people about it. But what is it? What is a credit score? A credit score is a prediction of your credit behavior, such as how likely you'll have to pay a loan back on time based on information from your credit report. Companies use credit scores to make decisions on whether to offer you a mortgage, credit card, auto loan, and other credit products, as well as for tenant screening and insurance and a whole lot more. They're also used to determine the interest rate and credit limit you receive. Companies use a mathematical formula called a scoring model to create your credit score information in your credit report. What factors impact your credit score? Factors that are typically taken into account by credit scoring models include your bill paying history, your current unpaid debt, the number and type of loan accounts you have, how long you've had your loan accounts open, how much of your available credit you're using, new applications for credit, whether you've had a debt sent to collection, foreclosure, bankruptcy, and how long ago. You do not have just one credit score. Each credit score depends on the data used to calculate it and may differ depending on the scoring model, which itself may depend on the type of loan products the score will be used for, the source of the data used, and even the day when it was calculated. Usually, a higher score makes it easier to qualify for a loan and may result in a better interest rate or loan term. Most credit score ranges from 300 to 850. Learn how to access your credit score for free. This is just a link. This information will be posted below. You may have many different credit scores. Some will see slightly different numbers. You're going to have Equifax, TransUnion, and Experian. Those are the three credit reporting companies. And then underneath that umbrella are hundreds and hundreds of consumer reporting companies. Tenant screening, for medical, for online. Pretty much they can scrutinize the behavior by your purchasing, and they're probably tracking other things. They're very invasive, they're intrusive, they're rude, they're unprofessional, they're discriminatory, and I just think collectively they're just horrible agencies. But there's not a better model right now. So comment if you have a better idea on how to do this without infringing on people's privacy. Let me know, all right? The problem here is that they have so much information and their software is not bulletproof. And they've been breached. Subsequently, our so-called private data is not private anymore. And then scores are calculated at different times in different ways. And you can read this on your own. Your credit history and behavior form the basis of your credit score. Look, principle here is there's not a lot we can do about it. It's part of the mechanics of life today. You have to focus on diligence and also in terms of discipline in order to maximize your cost of living. In other words, focus on your debt. Eliminate whatever debt you can. Eliminate credit cards if you can. Eliminate borrowing if you can. And don't worry about credit score. It'll take care of itself. Comment, let me know. I know it's a very touchy issue for some people, and for some, it's a game. Some people think it's fun to try to get an 850 credit score. You're not going to gain anything from 830 to 850, and I have information on that. I'll have a video on that as to how quirky some people are in terms of their credit report. But look, if you have time on your hand and your goal is to have an 850 credit score, I say thumbs up. But anyway, comment, let me know what you think. Brad Williams, Frugal Finance. Hope that helped. Thanks for watching. See you soon.